Corporate Australia is being put on notice. If it doesn't step up on climate disclosures, investors will take their money elsewhere. The Investor Group on Climate Change, Principles for Responsible Investment and the Carbon Disclosure Project together represent more than $2 trillion in assets. The trio wants mandatory climate disclosures for the top 300 listed companies in Australia within 3 years, in line with action taken in the UK, EU, Singapore and Hong Kong. The CEO of PRI, Fiona Reynolds, joined me from London. She says climate reporting needs to be standardised to ensure risk is adequately priced. Fiona Reynolds, in Australia, there are already around 60 of the top listed companies disclosing their climate exposure, good and bad. Why push this further?
Well, first of all, the report, even though it says that there are about 60 companies who are disclosing their climate risks, a lot of those companies are disclosing them in a way that doesn't really provide the investment community with meaningful information. And we think that they're probably, it means that there's an underpricing of climate risks. We also know that when companies are using the various frameworks, they're using a whole lot of different scenarios. So out of 32 companies, there's 35 different scenarios that companies are using to tell us as investors about their climate risks. And so that makes it really difficult for investors to be able to get consistent information and really to disclose. So we think that the voluntary frameworks that are in place at the moment that the Australian regulators, the Australian government require are really just insufficient.
So what kinds of things need to be communicated to the market and at what level? What's the gold standard here?
So the gold standard is the Task Force on Climate-Related Financial Disclosures, or TCFD for short. And this has been something that's been championed by Mark Carney, who was the Governor of the Reserve Bank of England and is now a special envoy to the UN. And it's a framework that was designed by the industry for the industry, and it's been accepted in many countries around the world. And as investment is also global, we do need countries around the world to be adopting the same framework so that we don't end up with just a myriad of them and then investors just can't compare or confuse or compare or contrast, I should say. And also governments really can't be able to think about financial stability within their countries if they've got all of these different frameworks.
ESG, if you like, which incorporates these green credentials, is really becoming front and centre of company strategies, at least for the major companies. How do you go beyond just the disclosure compliance and achieve real world outcomes? Is the end goal here to innovate?
Absolutely. I think that investors are starting to really think about, or have been thinking about for many years, about what are the environmental, social and governance risks to my portfolio. But now investors are also starting to think about, well, if I think about my portfolio, what are the risks on the real world? So if I don't align my portfolio with a net zero world, for example, if that's where we're heading to 2050, what risks do I have? What are my investments going to be worth over the longer term? What do I need to do about my investments in fossil fuels? But also, more importantly, what do I need to do as an investor to capitalise on in the investments for the future? We know that we need a lot of investment in new technologies, and there's going to be a lot of new innovation to align to net zero. And how do I make sure that I'm making those investments? And that's what we need good disclosure for, good data, and then that helps us make really good decisions.
Well, in Australia, the political climate arguably is not driving a lot of urgency, but that isn't the case offshore, where you are in the UK and in Europe, and now under a Biden administration, the US is trying to get on the front foot of climate action.
Absolutely. It's fantastic that we now see such great change within the United States, and I hope that will be something that spurs on the Australian government. I think when we're talking about climate change, Australia risks really being left behind if it doesn't catch up with what other countries are doing. Even on the disclosure side, there's a lot happening in other countries, in New Zealand, the UK, in Singapore, Hong Kong, etc., are all making commitments about disclosures. And given that Australia is one of the few developed countries who has made a commitment to net zero by 2050, or who hasn't made one, all the other countries have, I would at least think as we headed into Glasgow and we head into G20 meetings, that taking steps to make sure that our companies and our major investment and financial firms are disclosing and thinking about climate risk would be something that would be easy for the Australian government to do and to work with Australian regulators to do.
Well, should it be incumbent on the government to drive this change or on the companies themselves?
Well, I think that because there is a lack of government action, it is business and investors who are leading the way. It's the private sector who is doing the most. But at some point, you do need to have government regulators sort of make sure that everyone's working from a level playing field if we really want to get consistent disclosures and really get things moving. So I think it's now time that we move from this voluntary sort of system that's a bit of a mess to a mandatory system. And in our report, we set out how the regulators can do this. And we're suggesting that the move is, not overnight, but we've set out steps to 2024 when we really believe that it needs to be mandatory and a very comprehensive system put in place.
And are regulators in Australia like APRA and ASIC, the RBA, the ASX, are they up to the task?
Well, I think that all of those organisations have really been quite out in front, and they have sent strong signals. But again, it's not compulsory just yet. So we want to work with all of those organisations. We also want to work with the financial regulators, and we want to be able to sit down with them and look at how we will be able to take our roadmap forward. I think that there's good signs so far since we've put out the report, and we've got a meeting with regulators that's set up for July to be able to do this. So I think there's really good signs, and I think it will be really just much better for Australia and for Australian businesses to get capital from overseas, from investors around the world, because capital is global, it's not just in Australia, if we could get mandatory reporting.
So that brings me to my next point, because beyond the need to be addressing climate change, there is real financial risks for not outlining climate exposure, you say, and that has to do with the fact that investor capital might flow elsewhere.
Exactly. Investment capital is global. The investors don't have to invest within Australia, and there's plenty of opportunities that are happening overseas as other countries are starting to commit to net zero by 2050. Therefore, their industry policies are changing. They're changing things like in the UK here, there's a date to phase out the combustion engine. There's dates for when we want to see electric vehicles. There is things in place to say how we have to go forward with building codes and how we retrofit buildings. What should new buildings look like? How do we change land policy, agricultural practices? This all helps when a government sets out a clear roadmap. This helps investment flow. So if the Australian government can't set out that roadmap for energy policy for the future and industry policy, then we may find that Australian companies are at a disadvantage.
Well, how is Australia and Australian companies perceived offshore when it comes to green credentials?
Well, the Australian government is seen as completely as a laggard on climate issues around the world in all the things that I participate in. There are some very good Australian companies doing some good work, but again, when you don't have a regulatory environment that allows this and drives it forward, then that puts companies, I think, behind where they should be.
Well, a recent report from UBS Asset Management, written by the Economist Intelligence Unit, found of the 450 institutional investors surveyed, almost three-quarters agreed that incorporating ESG measures resulted in better financial outcomes when compared to the equivalent investments in the 3 years prior to the pandemic. So it's not just about attracting investment, but achieving better financial results in the first place.
Oh, well, absolutely. For example, if you don't think as a major investor that you need to adapt and think about climate risk and what it will mean to your portfolio over time. And if we think about all the superannuation funds in Australia, they are long-term investors investing your and mine superannuation for our retirement. They need to be thinking about their investments, not just today, but what will the impact be in 5 years, 10 years, 20 years? And we know that climate risk is going to hit companies. We know that there's increased physical risk. We know that we're seeing greater droughts. We know that we're seeing more fires. We know all of these issues, and we've got to adapt, and we need to change, and we need investment to flow to be able to do that. And when I hear those research figures from UBS, it does worry me about the other quarter who aren't thinking about ESG risks. I certainly wouldn't want my money invested with them.
Well, when you look across the sectors, there are some obvious ones that are going to be particularly affected by climate risk, I guess oil and gas, for example. But where do you see the biggest risks and the biggest opportunities?
Well, obviously, in the fossil fuel sector is where there is great risk, and there's great risk in Australia. And from the investor point of view, we're part of a coalition of investors that involves 500 investors representing 52 trillion in assets under management across the globe. We're engaging with the 100 largest emitting companies in the world. Many of them are in the fossil fuel sector, but also in the aviation, transport sector, some in real estate. So it's quite broad and wide. I think in terms of the opportunity, there's just huge opportunities. There's huge opportunities in obviously the obvious things like renewable energy, batteries, all the components that we need to make electric vehicles, all the components that we need to make wind turbines. It's really endless. And I mean, a lot of investment is required in carbon capture and storage as well, and what we need to be able to do that. So, I think it's limitless about the opportunities that are out there. Really, our economy is going to completely change. Economies around the world are going to change. How we work, how we operate today is going to be very different in 20 years. Where our energy sources come from are going to be completely different.
Fiona Reynolds, thank you so much for your time.
Thank you.